Hello everyone, welcome to Finance by Visha and Arpita. In today's video, we'll see multiple candlestick pattern part 3. The morning star and the evening star are the two candlestick pattern we'll be studying. Before we understand the morning star pattern, we need to understand two common price behavior: gap up opening, gap down opening. Gaps, a general term used to indicate both gaps up and gap down, are a common price behavior. The daily chart happens when stock closes at one price but opens on the following day at different price. So, talking about the gaps, opening up the basically gap up the opening. So, a gap up opening indicates buyer enthusiasm. Buyers are willing to buy stock at a price higher than the previous day close. Hence, the stock or the index opens directly above the previous day's close because of the enthusiastic buyer's outlook. For example, consider the closing price of ABC Limited was rupees 100 on Monday. After the stock closes on Monday, assume ABC Limited announces their quarterly returns. The number are so good that the buyers are willing to buy the stock at any price on Tuesday morning. This enthusiasm would lead to stock price jumping to rupees 104 directly. This means there was no trading action between rupees 100 and rupees 104, yet the price jumped to rupees 104. This is called the jump up opening. So this is called gap up opening. So gap up opening portrays bullish sentiments. In this image, green, you can see the green arrows point to a gap up opening. Now talking about the gap down opening, similar to gap up opening, a gap down opening shows a bear's enthusiasm. A bears are eager to sell, that they are willing to sell at a price lower than the previous day close. So this in this example states, if the quarterly results were bad, the sellers would want to get rid of the stocks. Hence, the market on Tuesday would open directly at rupees 95 instead of rupees 100. In this case, though there was no trading action between rupees 100 and rupees 95, the stock plunged to rupees 95. Gap down opening portrays bearish sentiments. In the following image, you can see the green arrow points to gap down opening. Now coming to the morning star. The morning star is a bullish candlestick pattern which evolves over a 3-day period. It is a downtrend reversal pattern. The pattern is formed by combining 3 consecutive candlestick pattern. The morning star appears at the bottom end of the downtrend. You can see in this image. In the chart, the morning star is encircled. The morning star pattern involves 3 candlestick sequence in a particular order. The pattern is encircled in the chart here. The thought process behind the morning star is as follows. The market is in a downtrend, placing the bears in absolute control. The market makes successive new lows during this period. On day 1 of the pattern P1, as expected, the market makes a new low and forms a low red candle. The large red candle shows selling acceleration. On day 2 of the pattern P2, the bears showed dominance with the gap down opening. This reaffirms the position of the bear. After the gap down opening, nothing much happens during the day P2, resulting in either a doji or a spinning top. Note the presence of doji or spinning top represents indecision in the market. The occurrence of a doji spinning set in a bit of restlessness within the bears, as they would have otherwise expected another down day, especially in the backdrop of a promising gap down opening. On the third day of the pattern P3, the stock opens with a gap followed by a blue candle that manages to close above P1's red candle opening. So, in the absence of P2 doji spinning top, it would have appeared as though P1 and P3 forms a bullish engulfing pattern. P3 in is where all the action unfold. On the gap up opening itself, the bear would have been a bit jittery, encouraged by the gap up opening. Buying persists through the day, so much so that it manages to recover all the losses of P1. The expectation is that the bullishness on P3 is likely to continue over the next few trading sessions, and hence one should look at buying opportunities in the market. Unlike the first and the two candlestick pattern, both the risk takers and the risk averse trader can initiate the trade on P3 itself. Waiting for a confirmation on fourth day may not be necessary while trading based on a Morningstar pattern. The long trade setup for a Morningstar would be as initiate a long trade at the close of P3 around 3:20 p.m. after ensuring P1, P2 and P3 together form a Morningstar. To validate the formation of a Morningstar on P3, the following condition should satisfy. P1 should be a red candle with the gap down opening. P2 would be either a doji or a spinning top. P3 opening should be a gap up, plus the current market price at 3:20 p.m. should be higher than the opening of P1. The lowest price in the pattern would act as a stop loss for the trade. Now, coming to the evening star. The evening star is the last candlestick pattern that we would learn in this module. The evening star is a bullish equivalent of the morning star. The evening star appears at the top end of an uptrend. Like the morning star, the evening star is a three candle formation and evolves over three trading sessions. The reason to go short in an evening star is the market is in an uptrend, placing the bulls in absolute control. During an uptrend, the market or stock makes new highs. On the one day of the pattern P1, as expected, the market opens high, making a new high and closes near the day's high point. The long blue candle formed on day 1 P1 shows buying acceleration. On second day of the pattern P2, the market opens with a gap reconfirming the bull stance in the market. However, after the encouraging opening, the market or the stock does not move or close by forming a doji or a spinning top. The closing of P2 sets in a bit of panic for bull. On the day 3 of the pattern P3, the market opens gap down and progresses in a red candle. The long red candle indicates that the sellers are taking control. The price action on P3 sets the bull in panic. Now, the expectation is that bull will continue to panic and hence the bearishness will continue with the next few trading session. However, one should look at shorting opportunities. The trading set for an evening star is the short the stock on P3 around the close of 3:20 pm after validating that P1 to P3 form an evening star. To validate the evening star formation on day 3, one has to evaluate the following conditions. P1 should be a blue candle, P2 should be a doji or a spinning top with a gap up opening. P3 should be a red candle with the gap down opening. The current market price at 3:20 pm on P3 should be lower than opening price of P1. Both risk takers and risk averse will initiate the trade on P3. The stop loss for the trade will be the highest of P1, P2, and P3. Now, coming to the fourth topic, we'll summarize the entry and exit for candlestick pattern. Before we conclude this chapter, let us summarize the entry and stop loss for both long and short trades. Remember, during the candlestick study, we have not dealt with the trade exit aka trades. We will do so in the next chapter. The risk takers enter the market on the last day of the pattern formation around the closing price 3:20 pm. The trader should validate the pattern rules, and if the rules are validated, then the opportunity qualifies as a trade. Risk averse trader will initiate the trade after he identifies a confirmation on the following day. For a long trade, the candle color should be blue, and for a short trade, the candle color should be red. As a thumb of rule or the rule of thumb, the higher the number of days involved in a pattern, the better it is to initiate the trade on the same day. The stop loss for a long trade is that the lowest low of the pattern. The stop loss for a short trade is the lowest high of the trade. What's next? We should look at 16 candlestick pattern, and is that all you wonder? No, not really. There are many candlestick pattern and I could go on explaining this pattern, but uh, what would defend the ultimate goal? The ultimate goal is to understand and recognize the candlestick are a way of thinking about the market. You need not know all the pattern. Think about driving car. Once you learn how to drive a car, it does not matter what car you drive. Driving a Honda is pretty much the same as driving Hyundai or Ford. Driving comes naturally irrespective of which car you are driving. Likewise, once you train your mind to read the thought process behind a candle, it does not matter which pattern you see, you will know how to react and set up a trade based on the chart you are seeing. Of course, to reach the stage, you will have to go through the rigor of learning and trading the standard pattern. So, my advice to you would be to take the patterns that we have discussed here. They are the same of the most frequency and profitable pattern to trade on the Indian market. As you progress, start developing trades based on the thought process behind the bull's action and the bears. This over time is probably the best approach to study candlestick. So the key takeaways from the chapter are: star formation occurs over 3 trading day. The candle on P2 is usually a doji or a spinning top. If there is a doji on P2 in a star pattern, it is called doji star, morning doji, evening doji star, else it's just called the star pattern, morning star or a evening star. Morning star is a bullish pattern which occurs at the bottom end of the trend. The idea is to go long on P3 with the lowest low pattern being the top loss for the trade. The evening star is a bearish pattern which occurs at the top end of an uptrend. The idea is to go short on P3 which is, with the highest pattern acting as a stop loss. The star formation evolves over a 3-day period, hence both the risk averse and risk takers are advised to initiate the trade on P3. Candlesticks portray the trader's thought process. One should nurture this through process as he dwells deeper into the candlestick pattern. So this is all about the multiple candlestick pattern. I hope you learned a lot. If you did, please like the video, hit subscribe to the channel and share it with your friends who are willing to learn technical analysis. So the next topic would be the support and resistance. So stay tuned for it. Thanks for watching. Bye bye.